Hey traders, what's going on? Jamie Setley here. It is Jan 30 and 2019, of course. Um, Robert, what's going on? He's saying good CAD day today. Yes, it is. CAD is doing quite well. We've got risk markets going nuts out here on the upside. I see crude has just gone up to, hold on here. We'll get to all these things in a second. Hold on for a second. Okay, so that's why I've got alerts going off on crude. Anyway, can you guys hear me? Ty says can't hear you, but I'm assuming that you can hear me now. Hopefully. Ty says, are you freezing? Yes. Well, luckily I'm inside right now, but yeah, it's pretty darn cold here. In fact, I don't know if you guys saw, I tweeted this yesterday. Do you know that's actually parts of Canada and the upper Midwest, apparently, here in the States? It's actually colder here for the high temperature yesterday than it was on parts of Mars. I didn't know that was actually possible, but you learn something new every day, I guess. So yeah, so that happened. Yeah, Robert, go check out my Twitter account, my public one, the regular one, just like me, at Jamie Setley, not the SB Trade Desk ones, and you'll see I retweeted this article about that. I mean, it's pretty crazy if you think about it. So, all right, let's get right into it. Because we got a lot to get through, and I kind of what I want to do with these webinars from now on. So, I always kind of make it like an hour, right? But I'd like to have it so that, maybe sometimes it's an hour, maybe sometimes it's less. Because I don't want to talk just for the sake of talking, right? I'd like to kind of get through all the things that we need to get through. And, if that takes an hour, so be it. But it might take 35 minutes and it might take 40 minutes. Everyone's time is precious, of course, and I don't want to waste any of it. So let's get right to the levels here before FOMC. All right. So DXY, okay. The Ty says we love hearing you talk. Thanks, man. So we've got DXY, pretty good levels on DXY, and we've had some pretty good levels here for a little bit. So, we've got the 618 in the underside of the median line that we failed at last Thursday, and then of course had a big dump. Here's the thing with me on this, which is, you can get yourself in a lot of trouble when it comes to looking at shorter term wave patterns. So, but that said, it's something to take into account. I mean, you can count this rally in the dollar. I mean, you could count it as a as a 5-wave rally. So this could be a 1, 2, 3, 4, 5. That is really tough to deal with at the moment, given the fact that we're seeing these breakouts in a lot of commodities. I wrote about copper last night, right? We're seeing an uptrend in gold. We're seeing an uptrend in silver. We're seeing super positive action in commodity currencies, especially. So I don't know. It's just something to be aware of, right? Like, we need to see resistance here, I think, at that 96, 16, give or take, area in DXY to keep kind of a positive bias on euro in particular. But I would still pay attention to, the 95.50, 50s area for potential support in DXY. So as I head into FOMC, and again, I'm kind of taking my cues on euro off of DXY, because I see kind of DXY as being the much clearer instrument at the moment, right? So, when I guess there's no better example of that than last Thursday when you had us fail, and the right thing to do at that point was to be bearish DXY, but at the same time we were having this so-called breakdown in euro, and that made it really kind of confusing because they weren't really jiving. But the real thing to do would have been to listen to DXY, not look at the euro, treat the euro thing as a false breakdown, right? And it ended up being the case. So I just, kind of want to always keep an open mind. Ty says, why do I think that's a top, all these overlapping waves? Well, that's a good question. I guess here's one reason to think it's a top. Again, going on really short-term charts, you can get yourself in some trouble. When I look at long-term charts like this looks kind of like a pretty big resistance area to me, right? So, yeah, well, that's all there is to it. Now, here's another, let's go to, dollar CNH, okay? Chinese yuan. I would pay really close attention. Remember this chart? We broke here. That was a biggie. Pay close attention to 670.70, okay? You can get a decent bounce from there, and if you do, you're probably going to start to see the dollar, generally get a bounce. So I'm paying close attention to that as we head into FOMC as well. All right. Let's look at, say, dollar Swedish krona, which, as we say, is kind of always our leader, if we will. All right, so this is a 4-hour chart. We'll go to a daily. If we look at this action, this is one that certainly looks to be quite bullish, actually, or at least have some really good bullish potential, right? So that would actually have a dollar bullish bias to it. You can see there's a lot of things that aren't super, not everything is selling the same story here. So when I look at this, if this is a triangle, a classic triangle, A, B, C, is this D? One more drop in E. So for European currencies in particular, this might be the market that we really want to pay attention to and watch. All right. Because if we do get one more drop here in a proposed wave E, then we would be on alert for support at, somewhere down here, right? Let it play out, but we'd be on alert for support somewhere down here, maybe near the 200-day average, near that 893, 894 area, and then we'd be thinking that we would have the potential to go to the top side for one other run. Okay. Now there's always other interpretations, right? This could be A, and then this could all be a B. This could be A, B, C, D, E, and then in which case you have a bigger B finish over here at some point, and then you get a bigger drop. So, put down the crystal ball. There's no kind of, deal in the now a little bit. And if we start to turn over, we'll pay attention to what it looks like. But either way, even in either interpretation, you would be looking probably most likely for a bounce again within this range. Okay. All right, let's go to euro itself. All right, so euro, first of all, I do want to kind of show or discuss or at least address. So yesterday's post, you guys get what I was getting at or talking about with the DeMark buy signals, right? So DeMark has there's a lot to DeMark analysis, right? But kind of the, I guess, most popular methods of using it kind of for exhaustion and there's two parts. I'm not going to go into the whole thing. It would take like an entire webinar, but there's setup and sequential. Okay, so after a setup, that means you get 9 consecutive closes above or below the close 4 days or 4 bars prior. So if we're looking at a Euro chart, I'll just get rid of everything here except for what is considered to mark stuff. All right, so get rid of that, and that, and that, and that, and that. All right, so when you get a setup, so for example, like right here, okay, this is when we get a setup, a buy setup right here, because we had 9 consecutive closes in one direction below the prior 4 bars prior, in which case that plots a red line here, and that's called TD resistance, okay, and that's 1586. All right, well, after that, you go into countdown mode, and countdown mode means that you get the bar closes below the low of 2 bars prior, okay? And that goes on until you get to 13. With one of the rules, 13 has to be below the close of 8, okay? And when it's not, you get a little star here. So you can see we got that last Thursday sell-off. It closed below the 8 bar, and then we confirm this with the Friday rally because we closed 4 bars above the 4th bar prior. So I know there's a lot there I just went through, but you get the idea, hopefully a little bit. All right, so we triggered a TD exhaustion buy signal last Thursday. Now, we did the same thing over here, okay, in July. It did not end up working. It worked for like 2 days, and then we took a big, another leg down. My point was just to show all of the TD buy signals that have happened since the inception of the euro, just so you can see that a lot of them do occur at really big, important lows. All right, so that is all that's showing in this chart. Okay, this is like the most recent ones. This is, prior to that. This is back in the, early 2000s, and then you have back to basically 99, inception of the euro, and you can see all the buys. I have the sells on there too, right? Wanted to show them all, but the buys have worked pretty well for the most part. So there's that. So when it comes to euro, excuse me, euro itself, we have us right in front of FOMC, essentially just traded down to 114.07. Maybe you get, a slight dip here into FOMC, but I'd be looking for support to hold pretty close to where we are, frankly. I mean, you've got this high over here at 13.95. Week opens 14.02. You can see the 200 average on the 4-hour charts right here at 14.06, where the low is, excuse me. But really pay attention to those DXY levels, because those are the clear levels as we have discussed, right? Okay, so if you get a spike up to 96.16, maybe you get euro spiking, obviously just below today's overnight low, but nothing crazy. And we'd be looking to fade that move, okay? So to give you an idea, just a 50% retrace would be 1370, 61.8 would be 1350, 1356 is a square root level, and also, by the way, the high volume level from last week, right, from ECB, and you can see that right here. That high volume levels over here, that would be about 13. Well, it's 1336 on spot, but I'd say 1350 to 1370 is where kind of the key level would be in terms of any sort maintaining some euro bullishness. Dollar Swiss, actually. Remember last week we talked about the possibility of this being a fourth wave drop, it did end up being a fourth wave drop. So you've got 1, 2, 3, 4, 5 now up in dollar Swiss. Dollar Swiss, 5 waves up. Might want to take out this high up here at 100 or 0009. And if that happened, then again, you'd be looking for a turn down. But 5 waves up, you'd have a higher low at some point as well. So pound dollar. Couple levels to keep in mind here for the next couple of days. So 131.75 is that September high, or November high. Okay, you can see that we're getting here 1, 2, 3, 4. If we get a spike lower on FOMC, it'd probably be enough to say that you've got 5 waves down from the top, which is from Friday. In which case, watch for support around 130.12. Okay. Those are the lows from over here, the 24th. And that would actually present a couple opportunities. You could look to fade that for a buy and a recovery, probably back towards, 31.50 or so, which is the median line here. And then you'd be looking for a sell. So again, there is not a overall dollar bullish, dollar bearish thing. It seems to be, as it has been for several years, it's very currency specific, right? Like, it seems like the easy days of FX trading are no longer, it's never easy, so please do not misconstrue that. But what I mean by that is, used to be for years, you kind of had like a general dollar bearish, dollar bullish theme. It would work out pretty well, right? It's like if you could figure out the direction of the dollar, you kind of were good. It's kind of hard to screw it up. That's certainly not the case here, and it hasn't been the case for basically all of last year, as it pertains to the direction of different currencies. It's not a dollar market, so to speak, or hasn't been. It's almost like you have to kind of go commodity currencies and then Europe, but like separate the pound, and then of course yen does its own thing because it's the yen. All right. Kiwi, no change here. I'm leaving the order to buy, 68.05. Maybe before I'll move to 68.10. I'll let you know if I do. I think that, I don't want to overcomplicate it here. This seems to be a pretty good level to buy. And yeah, if we get this little trend line here would be 68.09 on FOMC. So a quick spike and then higher. My guess, by the way, would be that we'd be looking at something like 69.30 for resistance at some point. That is the old corrective channel off of the low from February of 2018. It's a whole year ago. Oh, how long ago it was. And that was resistance to the tick over here in December. And we are going to be back there, if we get back there again, it'd be 69.30, which, by the way, would be a parallel confluence because you've got this upsloping 75 line, you've got daily reversal resistance over here. That would be where I'm targeting. So, in essence, the trade setup is by, call it 68.10 at this point. Risking, say, 67.65. You're talking 45 pips of risk. You are looking for about 120 or so on the upside. Okay, about 3 to 1, not bad. Aussie. All right. Had an order in for a couple days, hasn't gotten hit. Was looking for, we had, 71, basically 71.20. Just make this simple and let's put up a chart. By the way, you can see, when I post the charts I have, and that, like with the counts, like ABCX, ABC, and like all the extensions, like 1618 and all that stuff. But then I like to get rid of them because I just don't like that much stuff on my chart. I already have enough stuff on there. And kind of don't see like what you need to see. It's just the price and the levels. So that's why I've got, that's why you don't see them when I'm showing them to you during these webinars a lot of times. All right, so let's step back for a second, and you can see the fork that we're working with on Aussie. All right, we're right at the center line. This, clearly a big spot. So, man, really would have loved to have gotten that buy down here at the 71, 20 to 30 area. Put us in a really nice position ahead of FOMC. Just wasn't going to happen for us here. And from here, what do? Well, let's look at I would say, so you see this zone here going back to October, right? Resistance, support, right? Support, and then a lot of trading around this really this month, right? Since mid-month, since the 16th. So that's going to be 71.60, 71.70. Okay, not that much lower than where you are now. 71.95, traded 72.05 this morning. I'd be looking for support there. So I'd mark that down at this point, get a quick spike or something like that towards maybe $1, strength or something on FOMC, just a quickie. And I would look for that to hold if indeed, we're going to have a bigger dollar move down today and this week. And yeah, I'd be looking for that to hold. And then you can see how clear it is. I say this, the first area to be looking for on the upside is like 73. It seems pretty obvious. 73, this parallel high in December, 200-day average is right there at 73 as well. I mean, that's pretty clear. So that's where I'm looking. I'm looking towards 73. The question is, where's the buy? Is the buy here, or do we get another shocker and come all the way back to 71.20? Or do we just look to buy a breakout, right? If we get a firm close up here, then we look to buy on this line back near 72, right? Dollar CAD. We started this webinar and Robert said, good CAD day today. Yes, certainly it is. So dollar CAD is right back on the channel from 2017, right? We're right back on that center line again, just as we were here early in the month. We had a great bounce, looking for resistance a little higher, never got it. Broke down, was looking for resistance a little higher on the underside of this line, never got it. So at this point, I kind of lean towards the idea that we're just about to break down and we're headed down all the way down maybe to the 2970s, which would be your next parallel. What I would do here, so again, wait for FOMC, but if you do get a breakdown, okay, then we'll look to set an order to short on the underside of this median line. If we don't, and if you get a spike, watch for resistance at 32.56. Okay, 32.56 is a high volume level from, what is that day? What day was that? It's all the way over here. So that was on the 25th at 9. What was on the 25th? That was last Friday. So that was last Friday. That was a high volume level. That's where I would look for support in CAD, resistance in dollar CAD at this point. All right. So mark those levels down. One or two things. We break down, you look to sell up here. All right. Or if you spike, you look to short 32.56 or thereabouts. Call it 32.50 if you wish. Okay, moving on now to we're going to kind of look at dollar yen and the indices and everything together. All right, so put forth this chart a couple days ago. I'm really torn on this. I just don't know. Like, I don't have a strong, I can see it either way. I don't have a strong feeling either way. I've got, from the flash crash lows of 1.3, you got an up wave. Okay, is that a 1, a dip in 3.2? Okay, this kind of, I guess you count an impulsive rally 3, and then another dip 4, right? 4 could take on all kinds of forms, right? We could be sideways for a little bit longer, but either way, it's certainly a valid interpretation. That said, there's also another valid interpretation, and that's simply that you're rolling over, okay? And that you're completing some sort of a top, right? Maybe even a head and shoulders top with a lower right shoulder, right? We just don't know. And at this point, all you got to do is really draw a line or just follow this trend line for the most part, but, draw a line under the lows here from Monday, which is 109.13. If you crack 109.13 and crack this trend line, then the impulsive 5-wave up thing goes away, and you're probably looking at, a bigger drop at some point, and that leaves this as a 3 up, and then you'll probably come down, retrace, and then later find a bigger low, a higher low against the flash crash low. So that's kind of what I thought was going to happen all along, but I have to take into consideration the other one at this point too. So again, hopefully with FOMC, we get an idea. I've been trying to figure this out in terms of maybe looking at yields and everything. Just nothing's making a whole lot of sense right now, a lot of clarity. I often say that before times of clarity, things are really dark. And at this point, things seem kind of dark, right? They just aren't making a ton of sense. So we'll just, we'll let it play out and give us the data until it is clear, okay? And again, we'll be watching here. So let's see what happens. But I will say on a very short-term trading basis, you've kind of come into resistance. I mean, you're open, okay? 109.71, there we are, there we have it. And this plays right into exactly what I'm talking about in terms of the indices. So when we look at the indices, here's the Dow. Guess where the Dow is? The Dow is almost all the way back to its 200-day average and on trendline resistance. Okay, the Dow's been leading on the upside here. All right, the Dow's been leading on the upside so far here in 2019. I almost said 18, but 2019. Okay, do we have a 618 over here? Probably something like that. Let's see. And we do. So we've got a 618, the 200-day average, and a trend line. That's a lot. Okay, so new high in the Dow, not dollar yen, resistance galore up here, or should I say levels galore up here. Oh, by the way, you have this too. I mean, there is so much up here. It's hard to see us breaking through this, but I'll leave it at that. NASDAQ. Lagging, right? NASDAQ is lagging. Dow's up here. Dow's up here. NASDAQ is lagging. So let's zoom in and look at, say, an hourly chart of this. This is more like dollar yen, right? In the sense that we have the possibility of kind of this double top thing. After yesterday's action, or I should say the post-Apple action, really, my favored interpretation at this point has to be something like this. Hold on. There you go. So this would be impulsive channeling. And my favorite interpretation at this point has to be 1, 2, 3, even though it's really ugly and doesn't make a lot of sense to me. 4, 5, and wave 4 itself unfolding as a triangle. So A, B, C, D. It's a lot like dollar Swedish krona, actually. Pull back E at some point this week, and then you look to go long for the terminal thrust on the upside. Okay? So right here, that means there's nothing to do in terms of the NASDAQ. I've been putting out myself kind of shorting resistance, and that's another thing when you're, I guess, shorting or buying anything. I don't like to do it unless I'm at a level. I don't care what I think, right? I don't just go long or short because I'm bullish or bearish. I go long or short because I'm bullish or bearish and I'm at a level. So, even if you're wrong here and it looks like I'm might be wrong on this, us having a bigger breakdown, okay, you're still not going to lose money because we shorted resistance. Well, we'll look to, get out and maybe flip if we complete the triangle. So let's wait till the Fed because maybe they have a shocker. I've been seeing a lot of headlines today like the Fed comes bearing gifts, and I saw a headline on Bloomberg where someone called Jerome Powell Santa Paws. Can't get cheesier than that. Santa pause as in pausing rate hikes. And the Fed saved everybody, and everything's dandy, and thank you, Fed, and it's the Fed's job to make the market go up, blah 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 blah. So with that kind of psychology, I frankly wouldn't be surprised if we got a break lower on the Fed. But this is why we got to wait for the Fed, because if we don't, if we say spike higher a little bit and then come in, or if we come in and don't break and then get another move up, you have the real possibility of this whole thing from January 18th just being a triangle before you get a so-called terminal thrust on the upside. So we're not going to deal with triangle targets or anything yet. Not going to do it until we need to, but that's something to keep in mind as a real possibility. Okay, let's move on to the S&P. Pretty much the same thing in terms of the triangle possibility, or the triangle from the 18th, right? So again, this is impulsive channeling in Elliott. So draw your 1-3 line and then draw an extension, a parallel off of 2. That one's actually like perfect. So yeah, what you're looking at here would be an A, a B, a C, a D. And if you get your E spike lower, then, and you don't break, then watch out because you might get another run to the upside. So again, very much kind of like in confusion, if you will, for me on this, because on one hand, you have, like I said, the Dow is pressing into resistance like no other, all right? On the other hand, you have these possible triangles in the NASDAQ and in the S&P, in which case, those would be bullish, short-term bullish continuation patterns, and then you would have terminal thrusts higher. Then you would have a bigger short possibility, all right? When we look at other markets, though, so two of the most important markets out there in terms of like sectors, in terms of overall market health, are financials and semis. So financials and semiconductors. Okay. Here's semiconductors. You can look at SOXX, which is the iShares Philadelphia Semiconductor Index, or you can look at SMH, which is the Van Eck vector. They look exactly the same. Okay. And here's the thing on this. We hit resistance again on these. So when I look at these, I'm like, this market rally seems to be a little mature, okay? Like we have had a big 5-wave rally, you can count it, 1, 2, 3, 4, 5. You've had a big 5-wave rally right up into resistance, 200-day averages here. You have these slope levels here, boom, 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 okay? Big move up Friday, huge gap down. Here's today's action. Opened on the high and we're fading. The semis up into resistance, I don't want to buy this right here, right? I mean, you need to come off a little bit. 5 waves up, okay? So this makes me skeptical slash wary of, essentially upside from here in the indices. That's not to say that they can't, right? They could, and this could actually stay below the highs, in which case you'd have a massive divergence in the, in the internals, and then you'd, probably get a bigger down move at some point. Another one, let's look at XLF, financials. This is more like the overall market at this point. You can see that we're getting into close to trend line, right? The trend line is going to be pretty much in line with the low from June, and that's going to be 2630, okay? But here again, this move is getting awfully mature, and you can kind of see if we go to an hourly chart on this, and let's just keep it day actually. And let's do a line chart. 1, 2, 3. Is this a sideways 4 or 5? This one jives a little bit more with what we'd be looking at in terms of the indices overall, right? Like we're consolidating, then we're going to get a quick spike to the highs, and then we're going to fail. We're going to pull back for, a partial retracement of this impulsive move, and then we're going to find a lower high at some point, and then we're going to go higher. Okay. When I look at things like emerging markets, EEM, we're 200 days right here. But the best average to look at for emerging markets, for whatever reason, is the 50-day average. Here's 2017, 50-day average all the way up for the most part, right? 2018, 50-day average all the way down. 50-day average is over here. You pull back to there, this is a screaming buy. And guess what? See this line right here? Hold on. That line over here is this line right here. Okay. And that's going to be like 40-40. So we're seeing, at least I'm seeing, Ty says, I love your work. Thank you, Ty. Thank you very much. We're seeing a lot of, it's like a million different paintings. It's not jiving. It's like a bunch of different pieces of art, and they're not making a nice gallery, right? They're just a lot of different pieces of art, and they don't go together, if that makes sense. So yeah, we'll see. This is why analysis and trading are so different, right? And risk management, which is trading, is so different than analysis, right? I can show you all these beautiful ideas and charts and everything, but they don't pay the bills, right? The bill pay comes from implementation of those ideas. And a lot of times that's doing nothing, frankly, right? And waiting for the setup, waiting for your pitch. It really is. I know it's so cliche, but it's so true. So we'll leave the orders that I have for now where they are. And, I have a lot of alerts set up for these different things once we hit them. Yeah. All right, we'll get into there. Okay, let's look at a couple commodity things. So, all right, absolutely a beautiful, beautiful chart in gold that we've got going on here. I mean, something else. So this channel all the way back to August, right? This channel, when it was developed, remember we traded between these things, finally broke above it, and we had what we considered an impulse. We went to the half extension line on the second day of January, right? Screwed around there for a couple of weeks. Then we had Friday, and gold went nuts. We're pausing a little bit here, okay, which not a surprise. We've had a pretty good run. But like I said yesterday, watch for support at this 13.0, call it 13.05, 13.06. And we're currently 13.11. We were as high as 13.16 or so this morning. So that'd be a $10 pullback, decent pullback. Then I'm looking for continuation on the upside to about 13.30. And you can see that is going to be the full extension. So that's your full extension, right? That is going to be a much more important potential for resistance in terms of like getting a bigger pullback in gold. because at that point you will have traded the entire width of the original channel. Okay. If we look back on this, we are looking at what could be, I think, this is all the way back to December 2015, by the way. We're looking at huge A, all right? Then we're looking at a triangle here. We are looking at a triangle all the way from the high in July of 2016. A, B, C, D, all right? And then you're going to get a bigger drop. At least that's what my belief is at this point. That's where my head's at, all right? From a trading perspective, I don't really care about that right now. All I care about is 1305 and about 1330, and I want to take those 25 bucks. Crude oil on another big run today. Let's go back. The monthly charts clarify. So remember when crude was going to hell in a handbasket and we were at 42 and change, and it was like, oh, damn, what's happening? Well, we had this channel from 1986. And here we are. And oh, by the way, crude's up 19-20% this month. I'm looking at resistance. So you can see this half line. This is the 75 line, right? I'm looking at that. Go to a weekly chart, you probably see it better. I'm looking at that. You can see here, yeah, this is better. So back to 2015, you can see the moves off this. Resistance, resistance, resistance. Not really resistance, but you kind of traded around it forever. And that's going to be at like 56 bucks, a little higher than that actually. It's going to be like 56.30. So you've got the high from Jan 2017 over here, 55.24. You've got, it's around the 38.2 as well. I think that you probably are going to go for that 56.30. And then we'll see what this rally is really made of. But I do think you'll probably pull back from there, right? We'll look, you know, start reading the papers for headlines, start scanning the headlines and seeing if we get, you know, a bunch of crude stuff in there, because, you know, the mainstream sentiment and all that stuff usually shines through pretty bright at the near term pivots in crude oil. I mean, you remember up here, 80 bucks, we were going to 100 according to, you know, the mainstream commentators. Down here, we were going to 30. So, you know, you get to 56, they'll probably call for 60 or something like that, and then all of a sudden it'll turn around and go back to 50. You know, so that's all I'm saying. But yeah, let's pay attention to that. Keep an eye on 56.30. Let's see what's going on here. This is copper is starting to get a little bit of a, so got a little bulled up on copper last night. We've already come into a level here. You can see this trend line here from September. The old support line turned resistance on a retest, turned puke out. We're back at it now. I am constructive copper. Looks clear as day on here that level, which is now, I said 269 last night. I don't think you're going to get 269 anymore. At least I doubt it after this move, because what you want to see here is you want to see us hold the median line. If you're in a bull trend for real, what you want to see is you want to see the market hold higher highs and higher lows. I don't just mean price higher highs and higher lows. I mean angle higher highs and higher lows. So that would mean, since you've gone through here, right, through the 75 line, which was once resistance here on the 25th last Friday, and then support on the on Monday here on the 25 line, what you want to see is you want to see us hold the next, you know, parallel in the sequence, which would be your 273. All right. So yeah, you want to see us hold right about here. And oh, by the way, slingshot setup, if you do break out to the top side and you break out of the channel up here at 270, call it 279, then you have potential for a complete blowout to the upside. And that is that. So are there any questions? Because that's everything I got to go through at this point. Pete says amazing as usual. Thank you, Pete. If anybody is in this polar vortex, be careful. People can get frostbite from these things. Oh, I'm getting more alerts. What's happening? Alert. Ooh, I just got an alert on an equity that I've been tracking. So, okay. This is a oil service company. Frac, nice symbol. King Group. You can see nice little head and shoulders here. Been pressing against this breakout level for 4 days. Actually, you could say a week, 2 weeks. So that could be interesting. Marco says dollar Swiss. Yes, my friend. Let's look at it. We looked at it way earlier, but let's go to it again. So, Marco, we had Marco, we were looking at, let's see, I'm just going to get rid of that because we don't need it. We were looking at this last week and we talked about maybe getting an impulse. It looks like we've gotten that impulse in terms of 1, 2, 3, dip 4, up in 5. So heading into FOMC, I would watch and see if you take out these old highs over here from December, which is going to be, basically 10010. But with 5 up here, you kind of have to be looking for a top, frankly, a minor top, but a top nonetheless. You can do a little trick here and draw a 2-4 line. That would be pretty high, wouldn't it? Either way, watch and see. Heads up for a top up here, just again because you've got 5 up. So I don't have like a setup here. It's just kind of what I'd be looking at. That is the daily reversal level. That would be a bit high, but that would be a little to pay attention to. Hey, thanks, Aurelian. So Ty's got yeah, euro yen. Let me take a look. Robert says Robert's asking about a basic getting to Elliott wave theory. Well, I mean, the best thing out there, I think, just for real basic understanding, not necessarily the implementation of it, because I think they I don't know, they're a little too dogmatic sometimes, but in terms of the backstory and kind of understanding the basics, I mean, really, the Elliott wave principle is a good one. That's just the one written by Bob Prechter. So Elliott wave principle is a decent introduction to the wave principle. So I would look at that. You can probably find free resources. I think I might actually have put something on here. Resources. Let's see. Oh, here you go. Suggested reading. Okay. Elliott wave principle. So you can go there and click on that. I've got, there's a couple books. basically 4. And yes, I do have my own book in there. So yeah, so I do have my own book in there because well, why not? No one really buys it anymore, but it's on there. The Logical Trader is a good one. Understanding opening ranges and risk management, classic charting principles, technical analysis of stock trends. That's kind of a classic. An Elliott Wave principle. Just that's your, if you want to get just a general, overview on Elliott Wave itself, you can't go wrong there. So yeah. Ty was wondering, is there anything on Euro Yen? Yeah, let's take a look. I actually had a pound yen chart right here, which I thought was interesting. So if we go to the daily pound yen chart, you can see that we're getting up towards that 200-day. It's a lot like equities, surprise, surprise. And you've got old lows over here. So like this is a low here from March, and we're already back there. And I go to the 4-hour chart, and you can kind of see here that you've got a pretty good like channel up here, right? So I would watch this, because if you break here, then you will have broken this channel. All right. And at that point, you'd be looking for, probably resistance somewhere on the underside of it. But that might be a bit of a behavior change in which you could probably get a move back down towards these lows over here in the 200 average on the 4-hour, which is going to be 140.75. That's a pretty good move down. Euro yen. Continue to follow this. Last Friday, I had written about, maybe getting a short up here. That's why, not really being in the groove here over the last couple of weeks. I was not putting in any orders, and rather needed to wait and see what was going on, because, well, just wasn't seeing it right. But yeah, you can see here, if we're looking for a spot where you're going to get maybe something in Euro Yen, we're just viewing this channel back to the high in October, okay? And I think you see all this congestion over here, okay, on these parallels, the high here. So that's going to be between, it's actually pretty good. It's a pretty good level. It's going to be right here on this low. Okay, you've got the low there from, what is that, 1226, and the yearly open, and that's going to be 125.60 to 125.90, and that is an area where I would expect to see something. And if you went up there and you had a solid maybe a big reversal bar or a capitulation spike, something like that, you'd be looking for this to trade lower. It's again, a lot of these things are lining up, similar to the equity markets. Things are pressing so hard into resistance, and we're very close, I think, to getting something in terms of a resolution to all of this. But that's the level I'd be looking at. All right. Okay. All right, everyone. Thank you so much for your time, as always. Truly appreciate it. As I tell everyone, as I try to remind every week, this helps me as much as it helps you guys going through these charts in somewhat of a structured fashion. So yeah, bundle up, Ty, bundle up, stay warm, stay safe, and good luck, FOMC. I'll be online in a little bit. Let you know any orders that I'm putting in or changing. All right, take care. Bye.